Hey traders, Raghee here. Welcome to Charts and Coffee for Tuesday. Great to see everybody. Where the heck's my coffee? I have no, oh my gosh. I am sans coffee for Charts and Coffee. I think I left it in the other room. We will manage. Great to see everybody. Couple things to kick off our session. First of all, take a look at the economic calendar that we're dealing with here. You'll notice that we have, before the bell, Bullard, which is always shenanigans. We have core retail sales. We have cap utilization at 9:15 in about 14 minutes, industrial production. All of that is just really not that interesting because looming over the whole market are two major FOMC poobahs. We've got Lagarde, we've got Powell. Now, Meester is really batting cleanup. A lot of times, especially in sort of interest rate sensitive environments, there'll be somebody, usually it was Williams, now we've got Meester, and she's going to bat cleanup after Powell. So if there's anything that's misconstrued, anything that needs clarifying, it's amazing how often after a Powell event, there'll be some Fed member who will be coming in to, to make sure that the market perceived exactly what Powell meant, or if the wheels came off the wagon, put them back on there. So that's what we've got coming up. Remember, Powell is looming over the market. We have one group of traders and investors who accept that this is a downtrend and there are more rate hikes coming. We've got another group of traders and investors who are not accepting that this is the path. And who knows, it may or may not be, but they're not accepting it and they're still fairly actively picking bottoms. And that's where you get the very violent corrections, retracements, bounces, short squeezes, call them whatever you want to call them, that movement higher. That's where we continue to see these. And that's unique to downtrends, right? Top pickers aren't quite as active in uptrends as bottom pickers are in downtrends. So that's what we've got going on to kick off the morning. And of course, this show is about your questions. So let's go ahead and jump into them, all right? First one, Harley, thoughts on long puts for XLC, VZ, Comcast. Yeah, so XLC is a very interesting corner of the market. It's the second or third heaviest weighted sector in the NAS. So you've got XLK, XLC, XLY. And so communications are and have been probably the weakest corner of the NASDAQ from a sector standpoint. Now, when you crack open the XLC, let's do that right now. When you crack that open, what you'll see is that a number of the names, now VZ is behind my head here, but VZ is also double red right here next to WBD. My list for XLC shorts are not always going to start with XLC, because if you pull up XLC and you go take a look at the July 15s, you'll notice that the, say, 60 or even 62 puts are really illiquid. There's just nothing going on there. And then when you get out to the September, there's plenty of liquidity. So if we were to keep an eye on XLC, which again, I have no problem doing, we're really going to be looking for liquidity. And that September 16 contract, the 60 or the 61 puts, as the market rallies up into the 21 propulsion, would be my approach. Now, as far as Comcast, like it a lot, very affordable. VZ, like it a lot. Double red, Match, Diz. Those are my four main names. Not that they are the only names within the XLC that are double red. It's just that those are far more affordable, far more scalable right, than the more expensive Google. And so Comcast, VZ, Diz, Match, and WBD all look quite good in XLC. All right, but keep an eye on where the liquidity is. XLC itself, September. All right, next up is, hey there, Josh, FXC. Not to be confused with FCX, which is Freeport McMoran. FXC is the Canadian dollar rallying higher. Look, we've got Powell today at 2 p.m. The dollar, bonds, the equity markets will all be in play. So what we're focused on here with FXC, and really the place we build that trade, the chart that we study is 6C, or even if you're comfortable with Forex, you're going to go out to the Canadian dollar, so US dollar versus Canada. Now, if you're comfortable with Forex, you know there's a lot of different combinations against the Canadian dollar. I'd focus on US dollar. So 6C is absolutely looking great. And then that would bring the FXC, that's the currency share for the Canadian dollar, also into focus. So you can short it, you can get long puts, but whatever you want to do, you absolutely do want to take that ride lower. But anchor that opinion mostly in the 6C, which is in the wave. It's at the 21 prop. Good looking chart. And that also should get us to look at some of the other bounces that we're seeing. Do I want to look at 6E or FXE? Look, this has been a monster trade for us in the mastery. We've been shorting this since the 115 and 111 handles. So yeah, we're really looking at a wonderful double red downtrend here. Short the rip. Keep an eye right there at about the 106 area, 1.06 on the 6E as your initial, I would call that your aggro, mostly your aggro trigger there. Keep an eye on it. FXC, we could extend it out to 6B. Now 6B and the FXB can be pretty tricky. It's not always all that liquid. And please do check the liquidity out on those June or Septembers. You're going to notice that it's just crickets and tumbleweeds. And FXB and an FXC, I got to tell you, my friend, it's not a whole heck of a lot better. So you'd have to play the underlying ETF, likely not the options on the ETF, or play the futures, or play options on the futures. And a lot of folks in our Sector Secrets Mastery realize that when I'm playing the option, the derivative of an ETF or stock or futures contract, the underlying is still valid. In fact, the triggers for the options are the exact same triggers where I would actually short or buy the underlying asset. So in this case, yeah, FXC and FXB would be the short of the actual ETF. So thanks for the question. By the way, gang, all of that is rooted in, I absolutely want to continue to look for long positions in UUP. That has not pulled back as much. So we're not seeing necessarily, well, we'll have to see what this looks like on the futures, because let's do this here. Do I not have my trading view up? I don't. Hang on, I can fix that real quick. So what we want to do is make sure we're looking at DX as well. I don't trade the DX futures that often, but we do need to take a look at DX as well. You'll notice that I feed my trading view with my TradeStation account. And survey says on DX, what do we have here? Pretty good pullback. So as DX pulls back to about 103, right? 103 on the futures, you want to take a look at UUP. So UUP is going to allow you to do something unique as compared to getting into the 6E or the 6B or 6C, etc. What UUP does is it gives you access to long dollar versus euro, yen, and pound. So UUP is a basket as opposed to that more straight up currency versus currency, dollar versus euro, dollar versus Canada, etc. So Josh, yeah, I do like that a lot. All right, Paul asked the setups. Yeah, so yesterday into the close, the closing session I did yesterday, and I set up a couple very aggressive, but I said, hey, you know what? The Qs or the NASDAQ or the MNQ was the better of the two. And SPY, we put a higher trigger on because my concern was SPY might move up a little bit more. Let me bring up those notes. So for those of you wondering, Rod, what are you talking about notes? Anyone who's in any of the sessions that I do, all you hear is my fairly loud, but I love this mechanical keyboard. I absolutely love it, but I've got my mechanical keyboard just going to town most of the time. And I'm taking a lot of notes. And I think what's really important about taking notes is, number one, I think we can keep up with the conversation easier when it's not only, being verbally explained, but also we've got just something else to, come on, workflowy. We've got something else to refer to later on. So here are my workflowy notes. I'm just moving them to the corner of the screen here. All right, so this was something we were looking at. Very aggro means the index can keep going higher and still be in a downtrend. We were looking at the 301s on the QQQ because the NAS is relatively speaking weaker. And that was the one that we really had our eye on with a trigger at 395, which I think we were pretty much at yesterday. As far as the SPY goes, the SPY, we had to see a higher high to get there. And that's what I wanted to see, maybe a gap up today in order to trigger that. All right. So would I be open to taking those this morning? Well, here's the cool thing, Paul. This morning, I don't have to say commit to the daily time frame, right? I don't have to commit to the daily time frame this morning because I can day trade those today, right? I can day trade those today. So what I'm going to do is shift to the 5-minute time frame and say, well, if I wanted to set up a short on SPY or on ES, I'm going to keep an eye on ES for that. That can map to the MES micro, that can map to the SPY. And so we'll keep an eye on ES for potential day trades. And we're about 17 minutes in front of the bell. Where are my drawing tools? There they are. All right, so what I'd be looking for is actually, let's do this. So we have 17 more minutes. Let's see what kind of volatility we get. I've got my resistance up in here, up against 4,100, and my volatility resistance. And I've got some beautiful support at 4040 and the 200 propulsion. So two very interesting levels. But notice that we're actually heading higher on my slow stow, right? 21K, 3D, 2080. There's just nothing better. If you're looking for a really great overbought, oversold tool that's built into your platforms, there's just really nothing better. Just use the settings that I'm sharing with you. 80-20, overbought, oversold, 21-3, slow it way down, and you'll get very similar signals to what I'm getting. So we're coming off this overbought. And if we're going to oversold, and if we're going to get up to the resistance of this overbought plus the zone, that's where I'll shorten the time frame, Paul. So yesterday we had a choice, QQQ or SPY. I liked QQQ better. Today, we can focus actually on something more along the lines of just day trading, and especially since we have Powell coming up. So that's the way that I'll treat that particular setup. So Paul, thanks for the question. Awesome follow-up to our conversation in the close yesterday. All right, moving on. How much does volume affect the price of the stock? Oh, sorry, I forgot one other question. What happened to 60 overnight? More buyers than sellers. That's really it. So dollar weakness, euro strength. Okay, so next one is, how does volume affect the price of a stock? So there's two kinds of volume. We have price-based volume, which is what I look at, volume profile. There's time-based volume, which is when participation comes in and out of the market. It's commitment. The way that it affects it is that it emphasizes certain strength. It emphasizes certain weakness, support and resistance. It's just going to emphasize that level and let us know what kind of size ultimately is sitting there. And volume is so important, gang. There's so many monsters in this market, all these things that we're told to be scared of, whether that be algos and machines and Skynet and pools of darkness, whatever it is, you can decode it with price-based volume. Use volume profile, use a VWAP. It will tell you where the size is. You don't have to get concerned about the things you don't see, because much like elephants walking in the wet sand at the beach, I may not be able to see the elephant anymore. It might have taken off down the beach, but those footprints will be there. That is price-based volume. Thanks for the question. All right, next up, I'm looking at shorting BJK. BJK, okay. The gaming ETF, all right. I didn't know what BJK was. All right, gaming, okay, cool. Nice looking trend. See how quickly, and by the way, gang, I don't know every symbol out there, but look how quickly we can decode things with some trend analysis, some volume analysis, etc. So you want to short that around 36. I'm with you. Yeah, maybe at 36 or just a little bit below even. Would I be better at looking at the bolts like LBS and WIN? So it depends on their weighting within BJK and their structure. The cool thing about playing the tide is you're playing a number of stocks. So my usual measuring stick for that, Bruce, is look at, and I don't have a BJK multi-chart built out, but that could be, we could easily build that out, grab the weightings, and then populate that layout. This is what I'm talking about. Populate this layout with the heavily weighted stocks within that ETF. If it's high concentration weighted, and most of the high concentration weighted stocks look like the ETF, so the boats and tide are in sync, then play the tide. But if you have some individual boats with better structure than the ETF, than the tide, then play the boat. And that's really what I look at. How in sync are the names within it. All right, next up, Julian, yeah, euro and pound. I think we covered that with the earlier questions, so hopefully that's all set. The daily forecasts are spoiling you. Very cool, Charles. Glad to hear. What are my thoughts on buying SPY and Qs? So, Jimmy, that's what we were just talking about earlier. So, thanks for the question. Lynn or HON. So, Honeywell or okay. So, no on Lynn because I don't have a trend, right, my friend? If I don't have a trend, Robert, if I don't have a trend, my thought is this: within the stocks of those corners of the market. Let's go take a look at that. So XLB, that's where I would look at. So what I want to ask myself is, what is XLB doing in terms of its own structure? And then are there any double reds? And so obviously DD comes to mind. ECL pops out. Be careful here. You have a lot of mix in this XLB. So I would say, and because I don't have clear trending structure in either one of those, Robert, it's not as if we can't trade them, right? Maybe there's some sort of momentum breakout or breakdown that's preparing to happen because of all the blue grab candles that are appearing, which is helpful in its own right. But it's a breakout. I prefer HON over LIN. You have overbought, oversold levels. Look at this beautiful pair of Darvis levels showing you the automated support and resistance. There's just nothing that's going to give you automated support and resistance like the Darvis will. It's very simple to use, and you can go grab it at countdowntrader.com. Gratis, my friends. Get that Darvis 2.0 on your screen, and you'll see the same lines that I'm seeing. So what I would have to say is I'm going to continue to prioritize the trends. Then once I've exhausted those, right? Once I've exhausted those, what I want to then do is ask myself, all the trends I've got setups, what has proximity, get my ideas out there, my trade setups out there, and then circle back and go through the market with a view on non-trending markets. So make that a second tier approach. All right, we're going to wrap up our conversation with some grains, wheat and corn. Wheat, I like that it's trying to get back into a double green. So WEAT or ZW, absolutely buy the dip. And then on my cards on the table, I'm already long corn, and I think that's the better of the two uptrends. But you know what? Since you're looking at grains, my friend Joseph, keep an eye on bean oil too. Bean oil has been a very strong market for about the last month now. So definitely worth keeping an eye on. All right. Okay, gang. As always, thank you so much for being a part of Charts and Coffee. Thanks for your questions. I've been trying to get through as many of them as I can. So I'll try to keep the answers a little quicker and just keep moving on. Thanks for your time. Caffeinate and dominate, gang. I'll see you all tomorrow, same time, same station. Be good to each other. And thanks for tuning in, caffeinating and dominating. Smash that like button and be careful. 2 p.m. Powell. All right. Talk with you soon.